Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks on Tuesday, August the 26th. And I'm starting off with Range Resources, where it looks like we've just seen a rebound off the floor of a rising May trend channel towards the 1.3 pence level. The 200-day moving average also coming in support around that zone at 1.27 pence, and higher second low really for August at 1.42 as well, helping along at the end of last week. If you're cautious on the shares, you'd wait maybe for an end of day close back above the 20-day moving average at 1.6 pence, but it does look as though there's been enough work done here, especially in terms of the two support points for August above the 200-day moving average to trigger a new leg to the upside. As you can see, the top of the rising channel from May hints at a 3 pence target, which clearly from current levels would be effectively doubling the share price over the next 1 to 2 months. Moving along to Scancell, and here it looks as though we've got a decent sort of rebound or reversal set up here. The bear trap towards 28 pence to start August, and then the unfilled gap to the upside through the 200-day moving average at 32.67 pence, and then the latest bull flag breakout through 34.5 pence, 35 pence at the end of last week. This is all very encouraging and gives the impression that we're in a rising trend channel from at the beginning of October last year, with the best case scenario target here currently as high as 50 pence. While we remain above the 200-day moving average. So we're risking around 3 pence to try and make another 15, which seems to be a decent risk-reward situation. I don't think there's anything else more that you want to see in terms of the upside, perhaps to break 37, 38 pence, which is the resistance from April and May. But really, this breakout that we've seen from the bull flag looks as though it will get the shares on track for the big target towards 50 pence. Next up is Victoria Oil and Gas, which is obviously another private investor favorite. Been taking sort of months to get off the ground, but it does look as though we are starting to gather momentum here after the rebound above the 200-day moving average at 1.21 pence at the end of July. That was a decent signal, and then we just had the bounce off the 50-day moving average at 1.43 pence. In the past week or so. The key point here is probably the break above the initial August resistance, which was 1.52 pence, and really above that we're looking for an acceleration to the upside, probably towards the top of a rising October price channel at 2.3 pence over the next 6 to 8 weeks. The stop loss, either an end of day close back below the 50-day moving average, or if you can handle that sort of money management down below the 200-day line at 1.21 pence. But really the 50-day moving average should provide decent support as we go forward. Finishing off with the Westminster Group, where it's been quite a rocky ride in the recent past, but it does look as though we're finally going to get off the ground here. The reason for saying that is the sharp bear trap that we saw just below 40 pence at the beginning of August. That was also below the 46 pence May floor as well. Since then, we've had an unfilled gap. Well, we've had a fill gap to the upside. The floor of that gap towards 49 pence. And really, while we're above 49 pence, which is also the area of the 20-day moving average, one would expect to see further upside. There was also a decent bounce off RSI 50 over the past week as well, which is normally a momentum indicator in terms of a stock or a market gathering strength. Situation now is above the 20-day line. We're looking for at the top of a rising, in fact, a broadening triangle from the end of April heading towards 70 pence as a minimum over the next 2 to 4 weeks. If you're cautious on the shares, maybe to wait for this 58 pence zone resistance for August to break, but it does look as though with a key reversal to the upside on Friday, the dirty work's been done by the bulls already. That's it from me. More updates from at Spreadbet Magazine.